Peter Lynch, a legend, he ran Fidelity Magellan, crushed the market. Then he wrote a book, One Up on Wall Street. It's a must-read. Why? Because Lynch believes anyone can beat the market. You don't need a fancy degree. You just need to understand his principles. Lynch's strategy is simple. Invest in what you know. He believes everyone has an edge. We encounter great companies every day. Think about the stores you visit, the products you love. Those are potential investment opportunities. Lynch teaches us to find undervalued companies. These are businesses the market misjudges. They have strong potential, but their stock price doesn't reflect it yet. This essay will explore Lynch's key lessons. We'll see how his strategies work. We'll discover how to find those hidden gems in the market. And most importantly, you'll learn how to apply these lessons to your own investment journey. Let's go. What's the key takeaway from One Up on Wall Street? Invest in what you know. This isn't just a catchy phrase. It's the foundation of Lynch's approach. Think about it. You already possess valuable knowledge. You have experiences. You have interests. These are insights most investors overlook. Let's say you're a coffee enthusiast. You frequent a local coffee shop. You see their lines are always long. Their new drinks are a hit. This is valuable information. This local shop could be part of a larger chain. By observing its success, you've identified a potential investment opportunity. This is the essence of Lynch's philosophy. Turn your everyday observations into profitable investments. Undervalued stocks are like hidden treasures in the market. They represent companies with solid fundamentals. They are poised for growth, but the market hasn't realized their true potential yet. Lynch provides a framework for finding these gems. He focuses on several key factors. Earnings growth. Look for companies with consistent earnings growth. This indicates a healthy and profitable business. Low debt. Companies with manageable debt are less risky. They're better equipped to weather economic downturns. Strong balance sheet. A strong balance sheet indicates financial stability. It shows the company manages its assets and liabilities well. Industry dynamics. Consider the overall industry. Is it growing? Is the company well positioned within its sector? By analyzing these factors, you can identify companies that are likely undervalued. These stocks have the potential for significant price appreciation as the market catches on to their true worth. Let's look at a real-world example. Remember Dunkin' Donuts. Before it became a publicly traded giant, it was a local favorite in many communities. Imagine you loved their coffee and donuts. You saw their stores always busy. You noticed their expansion into new areas. This simple observation could have led you to invest in Dunkin' Donuts. As the company grew, its stock price would have soared. This is the power of investing in what you know. Another example is Amazon. In its early days, Amazon was just an online bookstore. But people who understood the power of the internet saw its potential. They recognized Amazon's ambition to expand beyond books. They invested early and reaped the rewards as Amazon became an e-commerce giant. These examples demonstrate that Lynch's approach works. By combining your knowledge with careful analysis, you can identify and capitalize on undervalued stocks. From novice to investor, Lynch's tips for beginners. You don't need to be a Wall Street whiz to start investing. Lynch offers practical advice for beginners. Start small. You don't need a fortune to begin. Invest a small amount that you're comfortable with. Diversify. Don't put all your eggs in one basket. Spread your investments across different companies and industries. Be patient. Investing is a marathon, not a sprint. Don't panic sell when the market fluctuates. Keep learning. The market is always evolving. Stay informed and continue to learn about investing. Remember, investing is a journey. Start with companies you understand. Do your research. Be patient. Over time, you'll gain the knowledge and experience to become a successful investor. One of Lynch's most powerful messages is the importance of observation. He encourages us to be curious. Pay attention to the world around us. You never know where you might find your next great investment idea. Do you have a favorite restaurant that's always packed? Is there a local retailer that's expanding rapidly? These are potential investment opportunities waiting to be discovered. The key is to be observant. Ask yourself, what products or services are in high demand? What companies are doing things differently? What trends are emerging in the marketplace? By training yourself to think like an investor, you can turn your everyday observations into profitable investment ideas. In today's fast-paced world, it's easy to get caught up in short-term thinking. But Lynch emphasizes the importance of patience in investing. He believes in holding onto stocks for the long haul, allowing the power of compounding to work its magic. Don't be swayed by market noise or short-term fluctuations. Focus on the long-term prospects of the companies you invest in. If you've done your research and believe in the company's future, stay the course. Remember, Rome wasn't built in a day, and neither are successful investment portfolios. Patience is key to achieving your financial goals. While Lynch encourages trusting your gut, he also stresses the importance of research. Before investing in any company, take the time to understand its business, its financials, and its competitive landscape. Fortunately, we live in an age where information is readily available. You can find company reports, industry analyses, and expert opinions with a simple Google search. Use these resources to your advantage. Don't be afraid to dig deep. The more you know about a company, the better equipped you'll be to make informed investment decisions. One Up on Wall Street is more than just a book about investing. It's a roadmap to financial empowerment. Lynch shows us that we all have the potential to be successful investors. It starts with believing in yourself and your ability to learn. It's about trusting your instincts and being observant of the world around you. And it's about having the patience and discipline to stick with your investments for the long haul. So, start your investment journey today. Embrace the principles outlined in One Up on Wall Street. With time, effort, and a bit of Lynch's wisdom, you can master the market and achieve your financial dreams.